Hello, my name is Paola and I'm here to discuss the Savings and Loans Associations that are also known as a thrift. It is a financial institution that specializes in accepting savings deposits and making mortgages and other loans. Early savings and loans were in the business of neighbors helping neighbors. By law, these institutions must have at least 65% of their lending in mortgages and other consumer loans, making them particularly vulnerable to housing downturns as is our current situation. S&Ls were given a certain amount of preferential treatment by Federal Reserve in as much as they were given the ability to pay higher interest rates on savings deposits compared to a regular commercial bank. With marginally higher savings rates, they would attract more deposits that would allow them to continue to write more mortgage loans, which would keep the mortgage market liquid and funds would always be available to potential buyers. Some of the important characteristics of the Savings and Loans Associations are: it is generally a locally owned and privately managed home financing institution. It receives individual savings and uses these funds to make long-term amortized loans to home purchasers. It makes loans for the construction, purchase, repair, or refinancing of houses. It is state or federally chartered. Our presentation today will focus on Third Federal Savings and Loan. It was founded by Ben Stefanski in 1938 with only $50,000 in capital. Originated in Eastern Ohio and is now offering services in Columbus, Cincinnati, and Florida. Today it is recognized as one of the largest savings and loans associations in the United States. The company lives by its motto: strong, stable, and safe. Third Federal is here to help customers live better, offering low-interest mortgages and high-interest savings accounts combined with an impeccable customer service. In the 1970s, 6 mergers increased in holdings to about $200 million. 50 years later, in 1988, Ben's son, Mark Stefanski, became CEO and applied some new changes to the company, including going public. In 2003, it was reported to have $8 billion assets and $2 billion deposits in Florida alone. Its 4 guiding principles, concern for others, trust, respect, and a commitment to excellence, has allowed the company to become what it is today. With all of this success, they have given back a substantial amount to their community. Third Federal invested more than $50 million on various projects in the Broadway area where they first originated. These projects include the Broadway Development Initiative, Third Federal Corporate Headquarters, Broadway Elderly Housing Project, and Third Federal Education Initiative. They had a renewed commitment to the area where the bank first took root, in the Broadway area. In 1997, operations for new headquarters in Broadway was built. Upon opening, it provided 150 new jobs with continuing growth of additional jobs. Approximately 200 new jobs added since. Broadway Elderly Housing Project opened right across from headquarters in 2002 and has received low-income housing tax credit. They also offer tutoring programs and volunteer reading programs, and now they are implementing a high school credit management course to teach high school students about credit and money management to make them aware of financial decisions. What makes this company different from other S&Ls? Their business objective implements love, trust, and commitment to excellence. They don't borrow money from the Fed or outside of their funding loans. Third Federal makes business decisions based on their value system. They don't believe in putting customers at risk through questionable loan practices like subprime lending and zero-down mortgages. In the sense that they can make money on a customer by granting them a loan, they don't qualify for it. They would rather lose market share and educate the customer. They offer free home buying seminars and provide you with rate watch emails that email you rates daily. Despite the financial crisis, there's a lot of pressure on Wall Street to sell mortgage. They basically chose not to just grant anyone and everyone loans because it goes against their values. A good decision because it makes them more stable. Because of this, Third Federal is still lending and always have been lending.